Hi traders, welcome to another edition of weekly forex forecast on FSLess, which is for 5th to 9th of October year 2020. In this week, I'm gonna share with you guys the list of currency pairs I am watching out for next week, should in case of trade breakout opportunity. So if today is your first time viewing my YouTube channel, you are welcome. And then do not forget to click on the subscribe button, as well hit on the notification bell, so whenever I release additional content of this kind, you're gonna be the first to be notified. Also remember, forex trading is an high risk investment as well as high reward investment, so do not risk more than the money you cannot afford to lose, and then do not trade with a borrowed money. Here are the list of currency pairs I am watching out for next coming week. I have the British pound sterling paired against the USD. I have the Euro paired against the USD. I have the New Zealand paired against the USD. I have the British pound sterling paired against the Japanese yen. I have the US oil. And then we're going to wrap up things with the XAU paired against the USD or the gold. So let's dive into the weekly forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. So if I should try and connect from the swing low right here to the swing right here, and then try to catch the current price action zone swings right here, we can see the trend is still in a bullish rising channel. So the key idea right here is the bullish trend on the British pound sterling is still active. If I should zoom in right here, and then if I should try, you can see from the swing low right here, we got a massive bullish upward rally, and then right here is swing low, and then upward bullish rally, and then downward right there, still a bullish rally on the British pound sterling paired against the USD. And then we can see how the key level structure, which acts at the price level of the 1.2749, is actually acting as a support right here. It acted as a support right here, and a series of rejection right here before price broke out, and then we can see how price went far ahead to close back into this key level structure, which was a signal. The key level structure right here is still acting as a support for the bullish trend right there. And then we can see the next key level structure, which acts at the price level of the 1.29930, is the next key level structure the bulls have to break through. That is maybe next week. So there's something I want to show you guys based on the 4-hour chart frame. So navigating on the 4-hour chart frame right here. Here on the 4-hour chart frame, if I should zoom in right here, we can see the kind of pattern which we got right here at the low extreme swing right here. It's like a transformation of an inverse head and shoulder, which is a bullish signal. You can see the pattern right here. So don't be surprised next week if the British pound sterling head up higher and then close above the next key level resistance, which acts at the price level of the 1.29930. So let's check back on the daily chart frame. So next week, we have to pay close attention to the key level structure, which acts at the price level of the 1.29930. And then failure for the bears to defend this key level structure, whereby the bulls ensure a daily close above this key level structure, that it's a signal the bullish trend right here on the British pound sterling is resuming for another impulsive bullish upward wave. Alternatively, next week, if the bears should step in from this medium right here, they still have to ensure price below the key level structure of the 1.27497 before we can figure out maybe there is a high tendency for the bears to put price downward to the next key level structure, which acts at the price level of the 1.25115. So next week, pay close attention to the key level structure, which acts at the price level of the 1.29930, to see how the bulls and the bears react at this zone right here. Maybe the bulls are gonna ensure a daily close, or maybe the bears are gonna step in to reverse price downward. And then if the bears should successfully reverse price downward right there, then don't be surprised. The bears have high tendency to move these currency pairs in a more bearish downward trend to the next key level structure, which acts at the price level of the 1.255115, which was the support for the rally right here. The next currency pairs on our watch list is the euro paired against the USD. We can see the euro paired against the USD is still under the influence of the bullish aggressive rally right from the bullish flag right here. We have the rising flag as well. We can see how the bulls ensure a massive bullish close above the key level structure, which acts at the price level of the 1.7167. So let's zoom in on these currency pairs. Zooming in, we can see the close of bar. You can see this was a key level structure which acted as a support right here for the currency pairs right here. That was in August. We can see how Friday, Thursday, and then Wednesday bar actually ensured a close above this key level structure, which was a signal the bulls are so strong right here. So next week, if the bulls can ensure a daily close back into this rising channel right here, then don't be surprised. This is actually a false move. That is a false bearish breakout. And then there's something I want to show you guys on the weekly chart frame. If the bulls should successfully ensure a close back into this rising channel, so let's figure out what would actually occur on the weekly chart frame. Here comes the weekly chart frame of the euro paired against the USD. If I should zoom in right here, you can see we got a multi-year dynamic trend line right here, which acted as a rejection zone for the flow of price. That was in this structure right here. That was in 2018. We got a high swings right here, and then we got a high swings right here in 2020. So zooming in on this currency pairs right here, we can see the weekly bar is actually carving what a bullish arame. You can see that, and then which was a rejection structure from the dynamic trend line right here, which is a signal of a bullish interest. So next week, if the bulls should ensure a close of bar above this key level structure, then it's a signal this is a potential bullish arame. And then don't be surprised if the euro paired against the USD drastically appreciating value to the next key level structure, which acts at the price level of the 1.19621. So to have a more clearer, better understanding of this move right here, we have to pay close attention to the daily chart frame. So let's check back on the daily chart frame. Back on the daily chart frame. So next week, if the bulls should ensure a successful close of bar into this rising channel again, then it's a signal of resumption of the bullish rally on the euro paired against the USD, which has high probability to lead to the next key level structure, which was the high of this rally right there. That was in August and September. Alternatively, next week, if the bears should step in aggressively, whereby they ensure a daily close below this key level structure of the 1.17167, then it's a signal the bears are not giving up yet, and then the bears has a probability to reverse this trend downward, even to close below the last swing low right here, and then head downward to the next key level structure, which acts at the price level of the 1.14428. So next week, pay close attention to this key level structure of the 1.17167, and then the dynamic trend line right there. Maybe it's gonna act as a dynamic resistance trend line, or maybe price is gonna ensure a healthy close of bar above this dynamic trend line. The next currency pairs on our watch list is the New Zealand paired against the USD. We can see the New Zealand paired against the USD is currently on a bullish trend. You can see the bullish trend, bullish rising channel, and then we can see our price broke through of the channel right here. So let's zoom in on these currency pairs. Zooming in on the New Zealand paired against the USD, we can see the bullish movement in this rising channel right here. We can see the bullish movement right here, the bullish wave right here is still intact. For the fact right here, after price broke out right here, we can see it was a mild volume. And then I discussed these currency pairs with my VIP member sections community of mine. I discussed with these traders in my VIP members community. I said I am not yet convinced to short these currency pairs for the fact there was a mild bearish breakout right here. I want to figure out a well decisive bearish breakout, but which didn't occur. And then the rejection right here, it's somehow very suspicious. So for the fact we had the last high low right here, you can see right here we got a high low base right here, And then for the fact the movement right here is still above this high low right here, there is still has high probability to interest the buyers to put price more upward. We can see our price went further and then closed above this dynamic trend line right here. You can see it, and then the key level structure which acts at the price level of the 0.66027, which was a resistance structure right here, resistance right here, support right here, resistance right here, and the resistance right here, support right here, support right here. In fact, this is a very strong key level structure. For the fact the bulls are ensuring a daily close above this key level structure, it's a signal the bulls are willing to re-expose the next key level structure, which acts at the price level of the 0.67601. And then nothing is impossible in the market. Next week, if the bears should step in aggressively, whereby they put price downward to ensure another second coming, whereby they ensure a daily close below this key level structure and the trend line right here, and the key level structure which should serve as a confluence point right here, that is a confluence zone which acts at the price level of the 0.66027, then it's a signal the bears are willing to put price downward, and then it's a signal of the aggressiveness of the bears in this trend, not giving up yet. So don't be surprised if the bears put price downward to break below this key level structure right here. That should act at the price level of the 0.65500/0.65000, and then don't be surprised if the currency pairs depreciates to the next key level structure, which acts at the price level of the 0.63817. So next week, pay close attention to the key level structure of the 0.66027 and the dynamic structure right here on the currency pairs of the New Zealand paired against the USD. Next currency pairs on our list is the British pound sterling paired against the Japanese yen. And then here comes the chart. We can see this currency pair is in a bullish rising channel. The first impulsive wave, corrective wave. We have the series of bullish wave right here before price broke downward right here. And this was the last high low right here. And then we can see the last swings right here is still above this last high low right here. So for this fact, the bullish trend on the British pound sterling against the Japanese yen is still intact. So let's zoom in on these currency pairs. So last week we can see how the key level structure of 135.420 acted as a support. We can see it acted as a support right here before price went a bearish move downward close right here. You can see right here as a support, and then right here as a resistance, right here as a resistance. In fact, we need to zoom in more on these currency pairs to see how this key level structure has been reacting to price. You can see right from the historical price action right here, it was a resistance that was in April. Likewise, right here, resistance in May. Right here as a rejections of bar right here, that was the midpoint of June and July. Likewise, right here in July as a resistance, as a support right here close to ending of August, right here at the midpoint of September. And then right now currently in the month of October, we can see how it acted as a as a support again. So don't be surprised if the bull steps in aggressively next week, whereby they put price upward. So let's zoom in back again on these currency pairs. So next week we have to pay close attention to these currency pairs because the bulls have high tendency to move price upward and then make a retest. And then the next key level structure we have to look out for is the key level structure which acts at the price level of the 138.925, which was a resistance key level structure for the bullish rally right there before we had a downward trend, and then resistance right, a series of rejection zones right there. So next week, pay close attention to the dynamic trend line right here. Maybe it's gonna act as a dynamic resistance trend line, or maybe the key level structure right there is gonna act as a resistance key level structure for the bullish move right there. As well, pay close attention to the key level structure which is currently acting as a support for this bullish rally right there. Maybe the bears are gonna come in and then ensure a daily close of bar back below this key level structure. And then if the bears should ensure a daily close of bar below this key level structure, then don't be surprised. This is a signal of bearish interest willing to pull price downward to the next swing low right here, which acts at the price level of the 133. And then if that should occur, don't be surprised the bears are gearing up to expose the next high low right here, and then which should act at the price level of 132. So next week, pay close attention to the British pound sterling against the Japanese yen to see how price react at the key level structure of the 135.420, or maybe it's gonna be an upward bullish rally. And then if the boost you ensured a movement of price to this dynamic structure right here at the key level structure, there is two options which we got right here. It's either this key level structure or the dynamic right here acts as a new low high for a more bearish downward trend. And if the bears fail to defend this key level structure to form a low high right here, then don't be surprised if the boost put price to close above this dynamic trend line at the key level structure right here. Then we can tag this structure right here as a false move. It's a false bearish move, and then don't be surprised the British pound sterling against the Japanese yen is gradually resuming in the bullish upward rally. Also take note, the British pound sterling against the Japanese yen 4-hour chart frame has a kind of pattern of what? Of an inverse head and shoulder, which has a probability to constitute into a more bullish influence. Next on our list is the US oil, and then we can see the US oil is back to the last high low right here. You can see that we got a low structure right here and a low structure right here, which is the key level structure of the 36.02. And then I announced a trading idea in the VIP members community of mine last week to short the US oil. Actually, I short this currency pairs based on the 1-hour chart frame. So I'm gonna show you guys how I detected the trade and then I had the losing position. So here comes the 1-hour chart frame. I short this the US oil based on the 1-hour chart frame signal bar, and then with the formation of this bearish pin bar right here, I went short and then I had the losing position. And then after price made a pullback right here, my stop loss was being hit right here with a few pips movement. And then after that I executed another sell order right here after I saw price was approaching downward again. My entry sell stop was being triggered right here, and then I had a nice sell trade right here. And currently at the moment I am having my stop loss right here. That is, maybe next week if the market should reverse upward and then hit my trailing profit, no big deal. I recovered my loss and then I made profit right here. So there is no trading strategy which is infallible to the market. So what am I looking up to on this market next week? Let's check on the daily chart frame. So back on the daily chart frame, I am still supporting a more bearish downward move on the US oil. For the fact we are in a bearish move right here. This is a bearish move, no technical indication, no chart pattern. You can see the bearish move right here, a pullback bullish trend, and then now a bearish downward move. So I am looking out for price to make a close below this key level structure of the 36.02 next week. So if price should make a close below this key level structure, the next swing level we have to pay close attention to should be at the scale level structure right here, which should be at the price level of the 32. Alternatively, next week, if the bears fail to make a close below the scale level structure in order to aim to the next scale level structure right here, then don't be surprised if the bull steps in next week, whereby the reverse trend upward again. If that should occur, it means the US oil is actually trying to fluctuate within the range. It means the US oil market is actually turning into a range market. And then don't forget I have a selling position right here, which means my selling position trailing profit will be hit. So no big deal. So pay close attention to the US oil next week. Maybe the key level structure of the 36.02 is gonna be broken, or maybe act as a reversal structure for the bulls. Okay, traders, it's time we wrap up our analysis with the gold. We all know gold has been in an aggressive bullish move right from the swing low right here. We can see the aggressive bullish move, and then we can see the bearish move right here. And then we can see the pattern which occurred right here, like an ascending triangle right here. We can see how that was let's zoom in on. We can see how Monday bar actually carved an engulfing bar to this previous bars right here, and then even though Friday bar failed to ensure a daily close above the key level structure of the 1902.743, which was a support right here, support right here, and a support right here, which means this key level structure is still active. But there is something I figure out based on the weekly chart frame, so let's check that out. So here comes the weekly chart of the gold. So what can you guys notice right here? You can see right from the bullish move right here, we got a what? Swing high low right here, a bullish move right here. I can see right here technically there is high tendency for this swing low right here to act as a new high low. For the fact price that was the last week carved what? A bullish arami right here. This is a bullish arami which has high tendency to interest the buyers next week. So what we need to do right now as a price action signal next week is we need to pay a close attention to the key level structure of the 1902.743 on the daily chart frame. If we can figure out a well decisive close of bullish bar above this key level structure next week, then it's a signal of interest of the bulls willing to pull price upwards to resume the bullish rally on the gold, and which has a probability to transform this swing low right here into a new what? High low, like we did at right here, which means we had this bullish wave right here, a corrective wave right here, and then an impulsive wave right here, a corrective wave right here, then what? The next impulsive wave. Then don't be surprised if the price of gold appreciates to the highest peak in historical record, that is a price level of 2070.571. And then if the bulls can approach this key level structure, there is high probability, high possibility the bulls could break out of this key level structure. So next week, pay close attention to the key level structure of 1902.743. Alternatively, nothing is impossible in the market. If the bears should step in next week, whereby they ensure a what? Daily close of bar below this key level structure of the bullish arami right here, don't be surprised the bears has high probability to expose the previous key level support structure, which acts at a price level of 1793.802, and which has high possibility to interest the sellers to expose the next key level support, which acts at a price level of 1751.108. So this is the way I am seeing the gold next coming week. So this is all I have for you in this weekly Forex forecast. And then if you are looking out for a trusted, honest, transparent and reliable Forex brokerage company, there is the link I left at the bottom of this video. Check on that link so you can start trading on a reliable brokerage firm today. Also, you have the chance to receive a 100% welcoming bonus on your first deposit. Get that done right now. If you haven't joined my free Forex trading class, 3 times in a week I do hold free Forex trading webinar. Click on the link at the bottom of this video so you can get access to that class. In this class, you have access to ask me questions directly. And then if you are looking out for reliable VIP membership room, whereby you can get trading signals from me, what I do in the market, how I execute my trade, there's as well a link at the bottom of the video. Check on that link so you can become a VIP member today, so you can get access to quality trading signals from me every day, every week. So make sure as well you have a trading rules which can guide your trading activity in the market. And then do not forget to like, share, comment, subscribe to this YouTube channel for more educational content of this kind. Do have a wonderful weekend. Peace.